the US. Now, if you look at this chart here, you can see that earnings growth in the US is actually declining. And the only reason that it's still marginally up is because of share buybacks. Now, the share buybacks, so 2 years ago I talked about how US companies were stuffed full of cash. Well, what they've been doing in the last few years is using that cash and indeed adding to borrowings, and contrary to what you might read, the US level of corporate debt is at an all-time record as a result of this, buying back their stock in order to shrink their capital, boost their earnings per share. It's financial engineering on a grand scale, and it's being encouraged by these rather horrible activists like Bill Ackman, Carl Icahn, who basically go in and effectively asset strip companies for short-term gain. Companies which could have used that cash to productive investment are now paying it out in the form of share buybacks, which make some tax sense in the United States. And it's flattering earnings at a time when actually fundamental earnings are declining. So I'm not particularly bullish on the US, and when you actually look at this, which is the boom in the sort of stocks like Twitter, Facebook, the Just Eat sort of nonsense that we've seen going public relatively recently. They're not nonsense companies, but they're at nonsense valuations. You can see that there is a bubble out there, which is equivalent to the bubble of the year 2000, and I honestly believe that there's only one way for many of these companies to go